So do you think that this process with the inflation and devaluation of currency will essentially continue until enough people basically don't want to play the game anymore? Because, you look at it and, I looked at Klaus Schwab from Davos Group and I read his book on the reset, and you're seeing a lot of this rhetoric by some of these individuals that essentially don't want to lose control over basically a hegemony system that they've created. Meanwhile, you have more and more people starting to wake up and saying, I don't know if this is a good idea. So do you think that it's basically going to be a power by force where too many people just wake up? Or what is your philosophy on how this continues to unfold?
Well, 10 years ago, you didn't have Bitcoin, and the best idea you had was gold. And so if you look at the Weimar Republic, when you have absolute power and they just print the currency and it collapses, the entire regime collapses. And everybody's best idea is I hoard gold. If you look at Zimbabwe, eventually the economy collapses. If you look at Venezuela, the economy collapses. When you don't have an option, the currency collapses and people are left destitute, and sometimes there's revolution and yeah, I could make a list of all the bad things that happened in history because the money got debased and the economy collapsed, but I won't. What I'll say is I will offer an optimistic future. There are two things we have today we didn't have then. One, we have 6 to 7 billion people on the planet with mobile phones. And a mobile phone is a mobile computer in your pocket, and you have them in Africa, and you have them in South America, and you have them in Asia, and you have them in the US and Europe. And the second is we now have $1 trillion digital monetary network called Bitcoin. Anybody in the world with a mobile phone can download an application and they can start to take custody of their own money, and they can hold it either on their mobile phone, or they can carry it on a hardware wallet, or if you can't get a hardware wallet, you can put it in your head with the seed phrase. But the most practical use application is I simply instead of buying gold, Jake, it's not very practical for you to buy $347 worth of gold. The markup is extreme. It's going to take a long time. And eventually, if somebody knew you had it, right, it gets shipped to your house, or you buy it, they put a gun to your head, they take your gold. And how are you going to pay for anything with a block of gold? So it's not really a practical it's not a practical way to store money. It was the best way we had for 5,000 years, but it's not a practical way. Digital gold is a different thing, though. We're moving toward a world where 1 billion people, in the next 5 years, 1 billion people will have Bitcoin. I think by the end of this year, 200 million people will have Bitcoin. We're adding them at 5, 6, 7, 8, 10 million a month. Right? That's how fast it's going. And so we're going to get to a world where billions and billions of people have a wallet, and they have money in it backed by Bitcoin. And it doesn't matter whether the Lebanese currency collapses or the Turkish currency collapses or the Venezuelan currency. And it doesn't matter whether the euro weakens by 15% or the dollar weakens by 50%, because as people put their savings account into the bank of Bitcoin, into that bank in cyberspace, they protect themselves from the currency weakening and the currency collapse. And they have sovereignty. It gives you economic sovereignty. It's a way for you to store your own monetary energy, your life force. And you can store it for a decade, for 100 years, for 1,000 years. You can pass it to your kids and your kids' kids. First time in human history. So what's really exciting is individuals have a way to shield themselves. And so I don't think we have to go the way of a Zimbabwe or a Venezuela or a Weimar Republic. I think that, the Bitcoiners say Bitcoin fixes this. The solution is everybody uses Bitcoin as their savings account. And as capital flows out of those fiat derivative instruments that are losing monetary energy every year, and it flows into Bitcoin, it's like you've got Kevlar armor, against the incoming cold. Now what happens next? Well, if a government knows that you have the option to do that, then their technique doesn't work so well. It works less well. And then eventually there's a check and a balance. And You know, and if I can pretty much print money with impunity and I can force you, you know, down deeper and deeper into your hole, you know, I have infinite power, absolute power. Absolute power corrupts absolutely, right? As Lord Acton said. When I don't have that power, if I know that my citizens can actually just stop using the currency, and this is happening in like Nigeria, for example. If the citizens can just opt out of the system, then I actually have to sit down and say to myself, maybe I need to either, here's what's going to happen in Nigeria. They're going to say, we either need to fix the currency and stop printing infinite amount, and we have to uncorrupt ourselves. We can't just give away all the money to our cronies, and we can't spend money that we don't have, A. Or B, we have to adopt a different currency, maybe the dollar, a stable coin dollar, because no one believes our currency, and we have to defer to some other country's currency. Or C, people are just going to move and they're going to opt for a commodity currency like Bitcoin, and they're going to use that instead. And that puts every country to the question. And yeah, you can try to ban it. You can say, well, we don't want our citizens to have it. But, you know, how are you going to take away a product which I can hold on a mobile phone and I can access via VPN? I mean, look at VPN. People in theory can't access Google and Facebook and Twitter in China, but they access them. You can't really take away something which is encrypted, which moves at the speed of light over the airwaves. Just really hard. So Bitcoin ultimately is a stabilizing force for good. And it's not going to immediately solve the problem, but it's an antidote, you know, or it's an antibiotic. You're taking an antibody against this. The currency, if it's losing 20% of its economic energy a year, it becomes toxic. It's like having toxic blood running through your body. Or another way, Jake, to say it is, I'm sucking 20% of the oxygen out of your bloodstream every year, and eventually going to suffocate you unless you have an oxygen bottle. And Bitcoin is like oxygen. It's an antidote to a toxic currency. And at the point that billions and billions of people start to avail themselves of it, then irrational actions by government have a check on them. And then that becomes part of the conversation, and people go, oh, maybe we should think twice. Maybe we can't just double the currency supply, or triple, or quadruple, right? There are consequences. One last point. There's a rhetoric which is like, well, we're going to keep stimulating the economy because we want to protect jobs, but we want to make sure people have jobs. Well, there are two great pernicious, what would be the word, myths. One is people. The greatest thing you give someone is a job, and the other myth is that inflation equals CPI. Okay, inflation doesn't equal CPI. Inflation is the rate at which the things you want to buy go up in value. So if you want a house, the inflation rate was 11%, not 1. And if you want to buy stocks in the S&P, the inflation rate was 20% or 25% or more. So the pernicious lie is that inflation is CPI. It's not true. And the second pernicious lie is everybody wants a job. They don't. What people want is Social Security. I'd like to be able to not work for the rest of my life and care for my family and do what I want to do. So if you work for 20 years, you save up all your money and you buy a bond that pays you $50,000 a year in income, you have Social Security. People want Social Security. They want to be protected. They want to be able to have children, have a horse, live in the country, write their book, paint, right? Study. They want to be able to do what they want to do without having to work their fingers to the bone 90 hours a week, right? That's what they want. So if the bond costs $1 million and pays 5% interest, it costs you $1 million of life savings. But when the politicians lower the interest rate to 2.5%, you have to come up with $2 million. And when they drive the interest rates down to 1%, you have to come up with $5 million. And when they drive the interest rates to 50 basis points, you have to come up with, $10 million, right? And so there's hyperinflation in Social Security. And so when the banker says, we're just going to keep interest rates low in order to give you a job, well, you could also say, we're going to keep making assets more expensive, so you have to work forever, and we're going to enslave you to work forever, right? I'm giving you a low-paying job getting paid in a currency which won't buy anything, and you're going to have to do it until you're age 80. Okay, it's not a good thing, right? I'll leave you with the thought here. The road to serfdom consists of working exponentially harder for a currency growing exponentially weaker. That's the myth, right? We have to break out of that mindset. And that means strong currency is not bad, and not working is not bad, right? In fact, if you want to live a good life, you have to accumulate assets, and those assets have to be strong assets. And those assets, in the current environment, the assets are like a sail. You could almost say it's like I'm in a rowboat and I'm rowing, that's manual labor, and the wind is blowing 5 knots in my face and I can barely keep up with it. And then when the wind blows 20 knots in my face, like when the money supply is expanding at 20%, the wind's blowing 20 knots. I can't row forward anymore. I'm going to never get to my destination. I'm going to starve to death. So what do? You put up a sail and you turn the boat around and you sail with the wind, or let the wind blow you, or crosswise. And now you go 20 knots without working. Okay. If you don't look at the yacht behind the boat behind me, you need sails to cross the Atlantic. The assets are sails when the wind is blowing, and the wind is the rate at which the money supply expands. So if there was no wind, if the money supply was expanding at 0% a year, you have to go do something, because your assets are not going up in value. Actually, they'll go up. Your assets will go up in value at the rate the economy grows. They go up in value 2% a year, but you probably got to go do something else. But the wind blows when the money supply expands at 10%, your assets go up 10% doing nothing, right? And so the pernicious thing that happened in March is if you're on Wall Street and you have $1 billion in assets, you made 25% more doing nothing. You had the best year of your life. And if you're on Main Street and you generated $1 billion in cash flow, you have to work 25% harder in order to do nothing, in order to get nothing, right? If you work 25% harder, you got nowhere. If you're on Main Street, and if you're on Wall Street, if you went nowhere and did nothing, you got 25% more, right? That's the paradox of the rowboat versus the sailboat. And that's why if you want a business strategy as a business, it needs assets in it. And if you're an individual and you want a life strategy, a financial strategy, you need assets. And the only question is what's in your asset portfolio. And my view is that the apex asset, the best property in the world, is Bitcoin, because Bitcoin is property in cyberspace, and if it was property in California, it'd be taxed by Californian politicians. But if it's property in cyberspace, you can move it to Wyoming or Florida, or you can move it to Switzerland, right? And it's a property, but all you're doing is just holding monetary energy forever. It's very simple. Whereas a stock, it requires that you compete against a competitor and keep upgrading the product, and it's got lots of moving parts. It's very complicated. And so if I have to, and real estate, well, real estate is capped at CPI. If you're holding a rent, like, you can't raise the rents faster than CPI. So if the money supply is inflating at 15% and the CPI is 2%, you have a negative 13% real yield on the real estate. And you're trapped in the jurisdiction where you can't move the warehouse or the building. So real estate's not so good. Bonds, of course, are awful, because bonds are just long dated cash. You're locked into a currency and you got a negative 10% real yield forever. And so what are you left with? Scarce art, diamonds and gold are commodities. You can create more of them. Scarce art, Da Vinci, Picasso, baseball cards, collectibles, trophy assets. I would say, Jake, buy the house you want to live in forever with cheap debt, because it'll always be valuable to you. right? So if there's an asset that that you or your family value, buy that. That's simple. Buy Bitcoin because it's the dominant crypto asset network in the world. Makes sense. Other things, buy scarce assets that you think buy something you think a wealthy person will value in 10 years. If you think they're going to want to buy that from you, it's going to hold its value. But don't buy things they can make more of. Not everything's created equal. Like, yeah, your real estate, if it's in Palm Beach, it went up by 30% because that's rare. If it's in the Hamptons, it went up by 50% because that's even rarer. If it's just a house, it went up by 10%. That's good. But if it's land, well, I can find 20 acres of land in Kansas. It's not going to go up, right? If it's an apartment, well, if someone punches up a skyscraper next to mine, then my apartment gets devalued. So buy the most rare thing you can that's most difficult to devalue and is hardest to manufacture more of. What loses its value the fastest? Things that are hot, just electricity, right? Like I can copy your music 1 million times. Things with a low manufacturing cost with a high fixed cost. I'm stamping out 1 million candy bars on a factory, or I'm stamping out Fritos or manufactured goods with a high fixed cost, a low variable cost, low energy content. That stuff is not going to go up in price that much because you can make a lot of it at a low variable cost.